And now it's time for our weekly energy update with Dan McTeague, President of Canadians for Affordable Energy. All yours, Dan.
Well, thanks very much for that, Julie. Again, this is now becoming a little bit closer to the end of January. And unlike last year, when we saw this massive build in inventories of oil and other products, we're seeing that for gasoline this year, but not for anything else. This year is showing a bit of a different outcome, not just because of weather related issues in the US Midwest with the cold that we saw over the past week. We're now seeing what looks like the beginning of a pretty significant draw in supply. And of course, when you have issues like stimulus in China that could be very positive for future demand, it means that the days of slightly cheaper fuel may be behind us. Now, I know some other analysts and experts were saying 2024, no problem, it'll be cheaper than 2023. The problem with making those predictions when you don't know what's going to happen a few days from now is you wind up being predictably wrong. Or you're just basically guessing in the hope that people with lesser information and knowledge understand what's going on. But clearly, we're heading towards a point where prices are going to start to rise. And of course, here in Canada, we've seen a net increase in the past week or so of about 4 cents a liter. That's on average, but it's likely to get a little higher. And here's why. Not only have the geopolitical tensions been severely discounted in favor of concern about economic slowdowns and the US Fed and other central bankers raising interest rates and the effect on inflation, the effect on demand, we've actually overlooked a couple of very important factors. Demand has held up quite well during all of this, and we're now dealing with refineries having run, especially in the United States, which has run, almost at 100% production. They're going to have to start to slow down, or they're going to wind up, in serious difficulty. We have an example of that here in Canada, where the Parkland refinery had an incident, a rupture of a significant pipe in its plant. What it means is, of course, is Vancouver, which has been enjoying prices in the mid $60s, is now going to go to the low $70s. So as of Saturday, $72.9. I would think another 3 cents, perhaps another 8 to 10 cents a liter by this time next week. So you could be seeing a scenario in Vancouver Island, so that means Victoria, Lower Mainland, of $1.80 for fuel. That means that other regions may also be impacted as well. That is to say, most of British Columbia and even to an extent Alberta, where prices there in the $1.19 to $1.20 range, you could see a 3 cent increase this time next week. With Saskatchewan holding, for what reason I don't know, but they seem to like to hold at $1.32, $1.34, maybe even $1.36. I'm not expecting much of a change there. People in Manitoba and Winnipeg in particular were shocked when they got what looked like about a 10, 11 cent a liter increase. That's because gas stations were not applying a retail margin of about 8 to 12 cents a liter. They've done so, and that's why prices are likely to stay in the $1.22 range. Whereas Ontario, this time last week, $1.42, now we're heading to $1.50. So on Saturday, $1.49.9. That'll likely hold on Sunday. And we may see a 2 cent increase by this time next week. So the low $1.50s. Same for Quebec, which of course is 12 cents a liter more simply because of higher taxes. So look for the prices to be in the low to mid $1.60 range. Atlantic Canada, of course, the big story there has been about a 3 or 4 cent a liter increase in gasoline, which we correctly predicted at gaswizard.ca. That's where a lot of my predictions come on a 2-day basis going forward. But you'll see another probably 2 cent a liter increase come Friday. And much of this is due to the fact that oil prices are now starting to move to the upside. High 60s, low 70s. Those prices are going to start to see a bit of a release of the holdback of those numbers, and we're going to start to see oil firm up in the $77 to $80 range, with Brent being about $5 a barrel higher. Now, I'd be remiss if I didn't mention an important factor that I think all of us have to look at, not only from an inflationary point of view, but from a revenue point of view. The Trans Mountain Pipeline expansion could be ready in a couple of months. When it's ready, look for the discount of what we call the Canadian Oil WCS, Western Canadian Select, to narrow. It's usually been about $20 less than West Texas Intermediate, which is the North American benchmark. That could narrow $5, maybe even $10 a barrel. That will strengthen the Canadian dollar and likely lead to a little, less inflation for Canadians on every commodity that is priced in U.S. terms, and of course, which is derived from hydrocarbons like oil and gas. So all of these things are technically positive news. it begs the question, why did the federal government kill all these pipelines when so much good could have come of it and we might have averted this inflationary crisis that we see today? But I'll leave that for the next time. In the meantime, Julie, that's the price prediction, going up a couple pennies. So better be safe than sorry. Fill her up today.
Thanks for that, Dan.